Up only.
10, 9, ignition sequence start. 6, 5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Up only.
Hello and welcome to Up Only TV. We've got Dan Matuszewski on the show today. CMS Holdings, to those of you who don't know him yet, more importantly, or first off, rather, not more importantly, Dan is the point of the show here. However, we want you to know that this episode is brought to you by Blockfolio. Go to uponly.tv/Blockfolio today. Make a trade. You can go direct from one asset to the other. It is an excellent trading experience. If you want to go from ETH to Doge, there's no middleman. You just go right in between. It's completely made by FTX books. Great liquidity. Thanks to FTX providing that for you. And it's got all the portfolio tracking that you've loved since 2014. Thanks to Blockfolio for being our partner. Once again, go to uponly.tv/Blockfolio to check it out, download it on the App Store, etc. Cobie, hello.
Hello, mate. How you doing?
I'm doing well, and I think we actually started the show the right way this time, mostly.
Yeah. Let's see. But the current price of Bitcoin, according to my chart, is 55037. So I'm gonna make a note, and if this just starts dumping, we just cancel the show. This is the last episode. Dan, you're the last guest. I can't bear it anymore. The show's called Up Only, and it only goes down during the show. Dan, welcome.
Is your guys' hit rate every one? It's gone down. Is it that consistent?
We might have been flat once.
At first, the first few episodes it was okay, and then it started happening, and I think there's only been one episode since it started happening where it didn't dump, but it's kind of remarkable. It dumps for 90 minutes and then then reverses. It's like the show starts, it only goes down, and then it reverses. It's 55037 was the price at the beginning, and if it is above that at the end, I'm happy. If it's below it, the show's cancelled. But Dan, thank you for coming on.
Thanks for having me. It's good. I was gonna say, Brian, you got my name better than I think I've ever gotten it as an intro. I know you were worried about it, so that was very good.
Well, thank you. I'm sorry that I called you less important than Blockfolio. You are.
I mean, probably net. Yeah, that's fair. I'm not gonna fight it.
Is it true that you got the CMS intern to set up your microphone and it's currently held within a sock?
But it is in a sock because I didn't buy the stand, so that was I didn't realize this. I obviously set it up this morning. No, the CMS intern is actually still at college, so he's not actually nearby. He's actually an intern also.
I think you just made me the CMS intern there, Cobie, because
that's true.
Because I helped him set it up in the sock. Now the innovative solution of putting the microphone in a sock in a coffee cup was all Dan.
I just it's what I had. It was on my desk for some reason, and I just grabbed it and wrapped it.
Is that representative of your portfolio strategy as well? You just work with what you have.
It's very similar. Whatever's just on the table, grab it,
and wrap it.
Yeah, true. Slam it into something else.
Does the CMS intern only tweet? Is their job memes?
No, not at all. So actually, it's a funny origin story in the sense that the meme part is just random. He cold called me. He got an intro from a friend, a mutual friend that we had in the city, probably 12 months ago. And he called and he's like, I'm looking to get into crypto full time. I'm very interested in it. I'm a grad student. I was like, all right, well, call me in 9 months. We'll figure out where you are. We'll figure out what CMS is doing. Maybe there's something to do. And because COVID hit, they sent him home early. So he was like, I got 8 weeks or something like that with nothing effectively to do, because he's at home, he's got schoolwork, but he's got a lot of bandwidth. Can I do anything? And I was like, yeah, we'll take you on, we can give you some work. So he did a bunch of research related stuff for us for 8 weeks as an internship, which we don't have an internship program. He had just reached out and we sort of took it on. So the initiative definitely worked out for him. And then he randomly made a really good meme, a video once, and put it internally in Slack. And we're like, dude, this is great. And then I tweeted the first one. So like I sent it out. And then he's like, hey, I'm going to make this like CMS intern account. And do you care? And I was like, no, I was like, run with it. Like, I was like, also, you can do whatever you want. Like, I mean, like you're going back to school. And he's just like really gotten better with it. I think his brother showed him how to make the first one, but now he's like very much like figured out his like whole. So he's like, it's pretty good. So yeah, he makes like one every Friday now, give or take. And yeah. But he's going to be a full-time employee, so he took a job with us. He'll start, I think, July is when he's like done. So there'll be more coming.
It's interesting that crypto is the maybe the first sort of industry. Maybe there's others that I don't participate in. I've been in this stupid community for 8 years, so I don't really know what's happened much outside of it. But it seems like the first community where the only marketing strategy that is reliable is memes. Like, have you seen any other good marketing strategy that actually connects in crypto? It's like you genuinely have to have a meme guy.
No, so there's some truth in it. I think it's just like a product of like the timeline that it like came in. Like you see some intersection with like equities now, right? Like there's like certain things that like get like passed around on like for retail stocks in particular. But like the timing and intersection of like the growth of memes and like crypto, they just like perfectly collided, and it's just like sort of stuck to it. But I think if anything, it's gonna like suck more of like other asset classes like down to our level and like sort of like and like that. So like I think that's the trend, if anything. But then hopefully they just don't like make it super corporate and then like they ruin it for everybody. But so far so good.
Yeah. So for people watching that don't know about CMS, can you give a little bit of background, like to you and to CMS, like how long you've been around, how did you get into it? What do you guys
the
get
origin.
up to?
So God, I've been doing this now for what seems like ever, but I jumped into this whole thing late 2012 and then jumped in professionally career-wise early 2013 in the first run-up. So I was an equity derivatives trader for a couple of years out of college, and I was doing that as my day job. And like, obviously crypto markets, like now even, but like really back then they were just banged up, right? Like exchanges were 4 to 5% wide. Like it was like unclear, like how like money even like moved through the system on that side. It was like really inefficient. So it was just like easy money sort of make from a trading perspective. And that was like what drew me in. And then when it like started to get some real value, and I think this was like when the first like sort of investors in Silicon Valley started to like make a pitch for it. I think it was when Chamath came out, like the Winklevi bought all their coin. Andreessen penned that letter. I think it was in, I forget where it was, New York Times or something like that. But like there was enough like sort of like things happening around it where I didn't think it was going to disappear. I was not by any means like expecting where we got today, but I was like, there's going to be enough here. And things that the hedge fund they were like mediocre. So I went and joined up at Kraken. So I worked at Kraken really early for a bit. And then Jeremy and Sean raised money for Circle, which was in Boston. And I was living in Boston at the time, even though Kraken was mostly in San Francisco, but it was like very much remote even back then. So reached out to them and then worked at Circle for 5 years and helped build out that desk and like that functionality over like the course. And that was like through 2016 to 17 is like really when things like got out of control. And like we were sitting at the intersection, like we're doing like Coinbase's volume sort of a day, like in the OTC side of things. Like it was like pretty mania. Like we were punching so much money through the bank that like it very much became like a very big business for Circle, like through that whole period. So anyway, did that, left, call it early 2019, and teamed up with a guy named Bobby who ran DRW, which is the other like large OTC and like trading arm for Cumberland, and a third guy named Julian. And Julian has worked with me forever. He's just like sort of been in the shadows. He's like the tech guy. So he's like our CTO. And then the three of us pulled up. We trade our own capital, so we don't have any outside investors. Which lets us be a little more flexible in sort of what we do. And then, yeah, we're doing that now, probably going on 2 years. So, but obviously it's been like mania in that time frame. So we're like 11 people now, sort of sprinkled out all over sort of the East Coast, mix of like Canada and the States.
I'd like to get your take on the managing your own money side of things, because I've noticed a theme. You know, we've had successful fund managers on the show, and everybody either controls their own money or they have like really aligned investors, very few strategically aligned investors that have a tolerance for risk, or they have a 3-year lockup like Santiago last week. Why is that so important for, being able to be successful, to not have like jumpy LPs?
Yeah, because you got to be able to survive, right? Like this is like the biggest issue in crypto is and it's really hard to think about it right now because like we're just in constant euphoria, right? And like everything's just gone up like so many multiples, but like the drawdowns are big and they're long and like you can't get shook. Because if you get shook, then it's like lights out, right? So like you really have to either be trading your own capital and be like willing to take that risk, or you have to have LPs that understand it. But it's very hard to know if your like LP is like actually comfortable with that risk, like when it comes, right? Like everybody says like, oh, I get it. Like you can go down 60%, like totally understand. And then when it happens, they lose their damn mind and then they like puke the whole thing and like you got invested, like you had to gate the fund and people are suing and like things didn't go really well for a lot of the crypto funds in the first batch. Like they had bad path dependency because they kind of hit the market at a poor time. And then like there was a lot of like issues that like came up on the LP side. So I think what you end up happening is there's a lot more resolve in the people that have decided to like put their whole sort of livelihood and career on it and then like all their capital on it. And they also, there's no forcing function, right? Like nothing has to like unwind it. Like obviously you can like get out of control with your margin and then like you can sort of get yourself in hot water. But as long as you're managing your risk, like there's nothing that's going to stop you from like being able to like operate, which is not necessarily true if you have like outside capital. It's also like you're always in this like weird world where you're potentially fundraising too if you're raising outside money. And like fundraising's, first of all, it's a ton of time. So like raising money is like a full-time gig. And what you find is like you just become disconnected with the market. Like think about how much time you spend just trying to like understand what's going on, let alone like how you're going to like make actionable risk decisions on it. If you had to spend half your time just like talking to LPs, like either about their current investments and like what's going on or about like your next like raising, like you become disconnected from the market at some level. And then you have to lean more on like your own people internally. So look, you can, this is not like a slight against like sort of people that like raise. It's just, I find it, you're definitely fighting a lot of things at the same time to like go that model, which is why you see nimbler, I think more actionable, faster sort of things happening from people that don't have that weight on them. And when you take other people's money, there's a lot of rules that obviously come along with it, but there's also just, you have real risk that if you do something that in retrospect looks incredibly stupid, you have a problem. Like, right. And like in DeFi, this like is particularly nuanced in that like you fire money into the void a lot. Like in, yes, like sometimes like that ends up poorly for you, but like net, it probably ends up well.
Yeah.
But if you have other people's money, like you can't, if you do that and then it disappears and you like kind of don't have a reason other than like, oh, it got stolen because I'm an idiot and I like put it in this thing and like it was actually like a rug. It's like that's like a very, that's like a conversation you can't like really have, right? Like that's like a very hard thing to explain. And you like really run into risks of like, are you breaching some fiduciary responsibility, like doing all that stuff? And a lot of the LP agreements don't even allow you to like participate in certain things without
they've got like a certain mandate for what they can do.
Yeah, or the mandates are written in a sense that it's unclear if an activity is okay if it's not explicitly permitted, right? Like this is the problem with a lot of DeFi is that like it doesn't fit into a certain bucket of activity. And I keep saying DeFi because like I think that's where it's butting its head most now, but it's all kinds of activity in the market.
Yeah.
And you so when you discuss it, you said you trade your own money. I'd love to understand how you allocate that internally and like how you sort of mentally segment. I try and keep this liquid. I try and put this in speculative stuff. I'm going to hold these positions for maybe 5 years versus I'm going to hold these positions for 5 minutes.
Yeah, fair. So the books basically broke out. God, I keep like making up a different ratio every time we talk, mostly because like the balances are like changing so much. I would say it's probably like realistically now like a 60-40 split. Like this started probably 80-20 and it's like slowly grown again. So like that, and that's saying 60% of the balance sheet is like liquid active trading, which is anything that's actionable today, right? Like you have the tokens or the cash, you can buy or sell. Like there's a way that you can like get that exposure out of the market. And then the other 40% is things that are unactionable, right? Like this is anything that's either like locked up, like it's an investment where you don't have a defined liquidity profile. Like it's the longer tail of sort of things. And this is like definitely where any equity or token related investments we make falls into. That part of the business has ballooned a lot. Like there's a lot of people raising and there's also just like a lot of lift in the valuations for things that we have like participated in. So that's like why the two have sort of offset. But like you think about it like this, where as positions get liquid, you just like shift them and move them over into like the liquid sort of active book. In the liquid side of things, like we have some global risk limit of like what we think our risk should be in Bitcoin terms and then in dollar terms as well. Like we keep track of both of those. And then we'll strike betas to everything and sort of like run correlations of what we think, like best case, what we can think like this thing will match up, and keep that netted, right? So like if you want to go really long something and we're already at like a risk limit, you got to like find something to sell against it. And that sort of balances out our risk in that bucket at any given time. And then we'll have like risks along like tenors and like leverage and like venue. And like we really a lot of our day is just like watching what collateral and positions look like across like different venues and like moving and sort of truing up all that stuff on the liquid side. And then I actually don't do as much on the illiquid side. Bobby really runs that side of the house. And then we just like are obviously in constant communication, moving stuff between like funding and then taking positions as they become liquid. And then we tend to jam all the farming related stuff into the liquid bucket as well. Though like you can make an argument it could be in the other one.
Yeah, that sometimes it goes into either, doesn't it? On the illiquid stuff, if you're not the expert, I won't ask too many questions, but I'd love to get a bit of an understanding on like what is the average sort of timescale for such an investment, and if you're 40% in this sort of longer term speculative illiquid bucket, what is your outlook for the general market? Because someone that was a little bit more bearish would say that would be the part to be reducing at this point in the market where
fair. Right, because like you kind of like have to wear those deltas. Like there's not a ton you can do about that risk. Like you have to like punch it. So the vesting terms are like generally decided for us, right? So like that's the base case of like how long we're like looking to make like that bet for. The vestings have actually gotten very long in recent sort of deal flow that we've seen. Like we did a 7-year deal, we did a 4-year deal, we did a couple like 3, like they're not like 6 months linear sort of unlocks that you were like seeing historically, which is good if things work out, obviously, right? Like you have like keep the position through the whole life cycle of it, and like you can like sort of really help it out. It's bad because like it ties up a lot more capital for like a longer time, which is something we have to be like very cognizant of. In terms of like market outlook, like we just don't think about it when we make like these bets. Like our general thesis is this, right? Is like we think like there's net accretive value to most of the like things we're investing in, and the short-term fluctuations in 3, 6, 12 months in the market are not really a great decision to or to not make an investment. Now, we will make decisions on balance sheet, right? We'll be like, all right, like this allocation might need to be like useful for like liquid positioning if we think there's like potential, like there's a lot of froth in the market and we want to smash like the curve and roll it down, and like we think that's better yield. Like that will reduce the amount of money that we can do longer term deal flow with, but it's never like a deciding factor because we think the market will go down, whether or not we'll do the project, other than like we may need the money for something else. So that is the only way it sort of like feeds into that risk decisioning.
Can you
but otherwise like we're just sorry.
Can you unpack what you just said? You said smash the curve and roll it down. That's the balance of your liquid versus illiquid stuff, or
no? It's more just like
you never smash the curve. Yeah, I'm smashing the curve every day.
I'm a smooth brain. I don't smash the curve. I'm sorry.
More just like, look, like when the market gets like really frothy and goes up, like financing costs get really high. So like the backdated futures contracts get really expensive to spot. And there's like that implied risk-free rate for the short term.
I see.
Well, really to 3 months out.
So you want to play that
contract.
arb between futures and current.
Look, yeah, I mean, if that's at like a 30-35% roll down, like a lot of times that just makes sense for how much time is there. And like, it's just like a good hedge if like sort of the market inflects and like pulls back at any given point. So we do that a lot. So like that'll just like tie up a lot of balance sheet, and we'll sort of make a decision whether or not we do the deal on that. That being said, like it very rarely has like come up on that thing, just mostly because access to like borrow has gotten a lot better on the bilateral side. So like if we want to express that opinion, like we can like generally just like borrow the money as opposed to like needing to like allocate cash differently. But borrow rates get really high like when people want to put the trade on. So there's that counter to it as well.
Yeah, so if too many people are playing that arb off futures, then the borrow rate for actually doing it could make it less attractive.
Well, I think it's more just like bilateral cash lending rates tend to like follow like the front month curve roll down. Just that like some of the people that lend it like also will do the trade. So like in their mind, they're like, all right, I can lend it at 10, I can roll it down at 20. Like, why don't I just roll it myself. So you get a little bit like people like fighting that part of it as well.
Ledger, I can't believe you're not incorporating these strategies into your daily trading already.
Look,
I'm shocked.
I'm long only, man. I'm not hedging anything. I'm too poor to hedge.
But you don't even have to hedge, right? Like you can be long and do this trade. That's like sort of like the pitch on it.
Yeah.
We're up 700 since the episode started, by the way. The curse is lifted. We're just
Hey,
going to let Dan
Cobie, you
speak
can't
forever.
say-
No,
You
you gotta
can't say
wait. You
that.
gotta wait.
It's
No,
been
the curse is
15
lifted.
minutes.
It didn't just
really wanna
immediately
believe-
go down the whole time.
I want to believe I'm gonna go back to the desk and they just like bought a shit ton of risk to like undo this. Like I want to come back and just be like, all right, now we gotta unwind this. Like, but no.
No,
So,
I'm a believer now.
When people are doing these trades, is it the same people that are doing it in Bitcoin that are doing it in oil markets or currency or other places where they'll play a futures curve and whatever the contango relationships are and try to squeeze that out?
Generally, no. There's some people that have crossed over, right? Like you got to remember, your guy that's like trading tankers of oil, like is not going on Binance. Like there's like that reality. So like, it's still dominated by people that are crypto native.
Is there just not a reasonable venue for them to do that yet with size?
No, so there is. So CME has gotten very big, right? So if you look at like the growth of CME's notionals over time and how that is like an actual thing, that's people that are like savvy enough that they're starting to do that. There's two problems though, right? Like one is you have to buy the spot leg. So you have to buy cash Bitcoin, which you can do if you'll face like Genesis or like I don't know necessarily where you are if you're an institution. You're necessarily doing, maybe you have a Coinbase account and you do it. Like, or you stick it in ICE or something like that. The problem is there's certain structural issues with like owning physical and then facing some of these counterparties. And that has made it a little bit slower, I think, for people in the traditional world to do this, but they're absolutely doing it now, right?
Yeah.
Like you see the growth in like the CME trade. Like look, you're not going to leave a trade like that on the table for too long. And these guys aren't going to like figure out how to do it. I don't think they're going to be comfy trading on the other venues for probably a really long time still, or maybe never. But CME is definitely getting huge, and that's directly related to, I think, this trade in particular.
Are there risks to this trade with the way CME closes, like on those weekend gaps, or is the way it's structured kind of not matter if there's that weekend volatility?
There's always risks when you're posting cash against like a short. So here's the issue. If you sell quarterly futures contracts with Bitcoin as collateral, right? If you do it on like OKX or Cobie or the Binance coin margin futures, you don't have this issue, right? Because you have coin posted against the short. So if you're like short 100 Bitcoin futures and you got 100 Bitcoin, your account's fine. Like you don't have to deal with like the margining. But if you short 100 Bitcoin of futures on CME and the price is moving against you, you got to keep posting additional collateral, right? Because your collateralization is in cash.
Yeah.
Now the reverse is true on the way down, right? Like you want to be buying futures in cash if the market's cheap or backwardated, and you want to be selling it in coin margin if you can. And like I mean, this was the reason people just get bodied on BitMEX all the time, because like that collateralization is like, it's a really nasty curvature on the way down and people don't even think about it.
Yeah.
So the issue you have with CME, right, is you have gap risk on the weekend if you go up and you got to post cash. Like here's the thing though, like CME isn't going to like auto close you. It's not like this like idea that you just get like blown out of your like margin positions like in real time and they like tweet it. This is like a crypto thing. This is like not how like the real world, like CME doesn't like do that and then like post your name on like some bulletin board and be like look at this guy. Like,
But
so
then
like
but then the risk on CME is they can bankrupt you. Beyond.
Well,
the
CME is
exchange.
going to be like, yo, you have to get this money here now. But like,
Yeah.
so like traditional markets have like backstop systems, right? Like your brokers are on the hook and then like the clearinghouse is on the hook after that. Like there's a system of like how these losses move through the system. Like crypto doesn't have that. So like Binance is just going to blow you out of your position and be like, that's it. Like we don't have like time to like figure this out after. So like that you do have risk there, but you also have some recourse in the sense that you have time that you can like interject and like send the money, and like you have credit, and there's like bilateral relationships with people. Like you're a known person in that world to like these sort of counterparties. So anyway, that you do have risk though, and as it keeps going, you have to post more and more collateral. So this was the big concern when CME first launched, is everybody was like, who's going to sell these things? Because we were flying, right? Like it was just like going through the roof, and like, who's going to step in and start selling these things when we don't even know what the basis is going to be? Like, how far is it going to keep going? It's like, it's a really hard trade to like step into.
Yeah.
I would love it if Binance had a liquidation board with username as well. Just the whale alerts, the liquidation spam, but it just attaches a username on there. That would be incredible.
Oh man, the fact that it's like it's public in general, it's like great. Like I love it. I'm like so pro it. It's just like such a ruthless system. But it's what you got to do if you want to offer that kind of leverage and you want to like be able to extend it to retail.
I'd love to talk a little bit about extending that leverage to retail and how you think it's impacted the market. One of my like sort of more community and ecosystem based realizations is this cycle, everyone's very angry, whereas in 2017, everyone was like, the market went up a lot and everyone was seemingly happy with their new wealth. And yeah, maybe every now and again you bought an ICO like Orbs and it just like went to zero or didn't launch or something. But like this cycle, everything's gone like fucking, I don't know how 15x at the minimum end, I think, in a year. And it seems like people are extremely salty and like very upset. Like there's no need to be upset about this, but my main theory is that there's so much leverage available to everyone on every exchange on retail now, whereas in 2017 like you had to choose to go to BitMEX and you had to like choose to sign up
right
to
it was a hurdle.
Is it just because like Binance now defaults to 25x leverage and everyone's getting murdered on like 1 minute wicks?
I think that's part of it. I think the leverage in the system is like, it's obviously bigger. I mean, you look at the open interest, like it dwarfs it. I think the other thing that's like really big on it is I think a lot of people got de-risked in last March, right? So I think like it's just been like under-owned as a rally pretty much the entire time. So I think like a lot of people have that like look back on it where they're like, I owned all this stuff and I like de-risked, or like, and like they probably did it in equities too, right? Like this whole rally came off this like nasty deleveraging that happened in the market. And I think that's like led to a lot of the saltiness, like sort of as it punched through the whole time. It just like, it was so under-owned for so many people, like as it went through. But I think the margin is definitely like, look, I mean, I'm shocked at the amount of like friends I have that have gotten into crypto, like, but beyond that have like meandered into like these venues, and like I find them like trading with like 30x leverage on stuff they don't even understand or whatever, and like so that never works out. So there's definitely a degree of that's like sort of like wood chipping these guys. So I think they both are like plausible theories.
How do you think this like much leverage available to like regular, like every user basically, impacts market like price action and like the cycle overall?
So I think on the overall cycle, it doesn't matter, because I think at the end of the day, the cash market has to rule. Like you could like the financing related like pushes and directions are only short-term aberrations, right? It can't like really direct like the thing over like a long time frame, just because like it has to come back. I think it exacerbates the moves on the short term, right? So like things are overextending long and short, right? Like they're wicking too high in either direction just because of the aggregate leverage that's in the sort of system. So I think that's like the weird play that you get into it. Though in 2017, things were having crazy down candles just because there wasn't a lot of cash in the system at all. So like if there was any material selling that was hitting, it was just always empty books like on the bid like pretty soon. So the other side of this is there's very, very well capitalized like market makers now, and there's like real capital behind these guys. I mean, like the balance sheets of some of like the larger desks that are like providing liquidity on the futures is astronomical. So they can absorb much more across like the product suite as well. So anyway, but I do think you get these cascading liquidity events over timeframes that are sort of entirely driven by leverage.
What are the different profiles for the people that are participating in those times where volatility hits? Because one is the market maker and they just maybe widen out their spreads as volatility starts to hit, or whatever they have to do to make money on a delta neutral strategy. But then there's the others, like maybe yours, where you're open-ended in terms of what you can do. So you're just trying to seek how can we make profit in whatever scenario. Are there people that like strategically go step in as as funding gets out of control one way or the other, or you see a liquidation cascade and you see an opportunity to make a quick buck on it? Like, how do you approach that?
This is honestly like a lot of what we do in any given day. Is like we just are running into the other direction of the liquidations, right? It's like and like
just counter trading Twitter.
the market is paying you effectively to like be liquidity, right? Like if everybody's trying to like grab this thing and it's going higher and it's like all on leverage, Like you just step in and like you provide liquidity, and then you just like turn around. And what's crazy is how fast it goes from like one direction to the other, right? And you're just like, then you step in and buy, and then you like sort of offload the risk like when it goes crazy. So like financing related directional sort of prop trading is like a lot of like what we're doing on any given time. And what's really important though is you got to really understand what's going on in the cash market and like understand what that, because like at the end of the day, look, you may have like cascading liquidations down in futures, and somebody may just be chucking every piece of spot Bitcoin that doesn't like that exists that they can get their hands on. You don't want to step in front of that because there's not a ton of reason that thing's going to revert itself in any short term sort of like place. So like paying attention to like where all the flows are going is like very, very important. And then like there's a bunch of different things that you can like look like, and really having good color and conversation with a lot of the people that are trading on the spot venues is like another piece that like I think we uniquely know just from like our OTC backgrounds before this. But yeah, like it always is going to come back to the cash market, and then you really just like want to play like the futures around that. I mean, we tend to put that trade on via the quarterlies, though we will trade a lot of like the perps, like on the short term stuff. But like that financing has like been a really good proxy for us of like where to keep risk.
How much of that is a desk trader that you have, you know, someone managing 24 hours a day your accounts versus like algo driven? You just kind of have certain triggers that tell you when to step in.
It's very much like hand traded.
Okay.
Like we do some like electronic execution, but like all of the risk decisions are like primarily driven like by humans. So I think we're a little unique on that front.
Awesome.
Why is that? What is the what's the main reason? Do you not trust the machines?
No, we trust the machines. I think we just find that like we trust the machines for sure to like put positions in and out, right? Like they're going to execute better than we are at any given point. But I think there's like a lot of nuance to this market still, where there's like so much idiosyncratic things that are going on that we'd rather like have the ability to like pull the trigger on this stuff. I mean, or maybe we're just like going to get like completely owned by the like machines at some point and be out of it. But like we've been able to like keep punching so far.
I've been thinking a lot about the same stuff. Like when is my like edge going to be removed and just entirely like not being a bot is just losing, because I even prefer to set alarms to like wake myself up rather than to execute myself, rather than to execute at certain levels, because there's just always too much information that I want to sort of take in. And if I'm hitting a certain level, there are a bunch of things I want to look at, and maybe it is all automatable, but I'm not smart enough. So at some point, someone's going to do it. But yeah. So you're not using Gainsy bot, says chat.
I haven't. No. I mean, that being said, like we deploy like a lot of developers. Like we do a lot of automated trading on the deck stuff, just because like that's like not picked over. I mean, like if you like really want to know a timeline of when like that probably starts to happen, it's when the bulk of this volume is happening either on regulated venues, or the people that trade on those venues decide to like go onto the unregulated ones, right? Like the world is very much bifurcated still of like where are the traditional sort of players in like money markets and like equities and Forex, like still trading. And then where is like all the degen craziness like still persisting? Because as much as like you want to act like the asset class is like growing up, like it's still like a lot of levered speculators like moving this thing on the shorter time frames.
Yeah, you mentioned when you were talking about the liquid bucket, you have a bunch of DeFi stuff, and chat has mentioned they've noticed you've invested a lot in the Solana ecosystem. What is your approach? What is your approach to DeFi generally? And then I'd love to talk a little bit about ETH scaling.
Yeah, I think I have a pretty interesting perspective on the ETH thing. But so like DeFi in general, like we're of the assumption that like this is like very net, like valuable sort of market plumbing that is going to like persist and grow. I do think there's like a real regulatory shock that'll probably happen on this thing at some point. I think talked with Ledger about it before. But like after that sort of all works itself out, which I think it will work itself out positively, I think you're going to see like colossal growth of this like going forward. Like I just like it's so much more incrementally useful than like a lot of things that exist in the traditional world, that and having it all just like at your fingertips. Like as more of the world plugs into like rails of like dollar stable coins too, I think it just like becomes so much more useful as time goes on. The biggest like hurdle it's got to get over is some way of like getting around the fact that everything has to be fully collateralized. And either that's going to be identity based systems that actually work in the system, or like figuring out like walled garden type stuff, like that whole like Iron Bank thing that's like getting worked on. Like that problem is not solved. I don't know if they have like really thought about how to do that yet. There's a lot of people that want to solve it. But like that's like the last real missing piece till this thing like can do like the next leg, but it's definitely going to keep growing. There's so much trying to push into the system still, and so many people that are still like tapped out of it. Like think about how many stable coins there are, and like think about how many like institutions can like even really touch stable coins. Like it's kind of like colossal like that like mismatch. So like it's really only going to keep going in one direction. So I don't know. I find all of the pieces of deep. I mean, we use it every day in some capacity.
So as CMS, do you like buy and hold like DeFi tokens? Do you gen farm high APYs to dump it? Do you like sort of participate in everything for yield, or are you are just like holding blue chips and trading blue chip back and forth?
We'd probably take the largest positions in the blue chip ones just because like liquidity is there. Obviously, and like it's definitely risk scored accordingly to it. I mean, we will go pretty far down the risk curve and like what we will farm. But we just size it accordingly, right? Like you just like put a capital amount that you're like much more comfortable with there and like losing. So that's like generally just like how we size the bet. Like we will farm though as like a way to like build positions. We're very, very large in doing that in sushi, like in the beginning. And then like, obviously like became multi-sig and all that jazz. But like, even before then, like we were using that as like a way of just like building it because it was better than buying it. So that's like been a strategy a couple times that we've deployed over the years. It really is not a one size fits all thing like that we're approaching with the farm. I mean, there's definitely stuff we farm just to sell it. Like there's 100% stuff that we like, we're like, this is like going to exist for 3 weeks and we're just going to like make as much as we can. And then like, I just like that, I think that's the reality of it. And like, I don't think even like the projects themselves like always feel that that's not necessarily true. So like, as long as everybody's on the same page, like we just like sort of go with it. I mean, that's like definitely especially true of like some of these farming initiatives on other chains.
How's that related internally? Like when you're deciding, hey, here's a farm or here's a DeFi play or here's something that's on the liquid side, like it can kind of touch everybody, I guess, inside the company. So how do y'all determine like what's your strategy going to be on a particular play when it's not like Bitcoin and ETH on, margin?
Yeah. I mean, generally the first thing is like, is there any indication that this thing is like secure? Like, which is always like an unclear answer, right? Like, what's my chance of like principal loss? And then after that, it's like, all right, like how big can we do this? What do we need? Where do we have balance sheet that we can expand on it? Do we need to use like another piece of our balance sheet to like borrow or like lever to like get access to this thing? How much leverage should we use in it? And then like how much of this thing do we like even like reasonably like think we'll be able to like move or exit or keep, or like the position sizing is sort of the last thing. And then we just sort of go and do it. That's like generally, I mean, like the first thing is always like, all right, like what's like the real risk of like principal loss?
Who are y'all using any of the DeFi native platforms to pull any of that leverage? Like, are you using Aave and Compound and those types of things?
We've used both. We use them pretty consistently as like we sort of see fit. Like there's been like farming things like where we've done like Compound USDC into it or like USDT. Like we participate in those things as like we'll also just like stick if we have like spare balance sheets sitting around like in there to like lend out, and then like we can just like grab it if we need it for like collateral later. So like a lot of that is like just like jockeying like collateral levels that like we're keeping at like different venues and like making sure like our excess capacity is like earning some yield. The thing like you got to watch out though is like if there's a material market move to the downside, like you're not necessarily going to be able to like get that as fast as you think you can, or you're going to be like paying an ETH to like get out of it. So yeah. I swear to God, I almost like killed one of my traders once because we were like, it wasn't his fault. He was like trying to like push this transaction through.
Kill someone.
It's like his fault. Well, whatever the gas fee had put on it was just so low, and there was like 50 transactions blacked up of him like trying to like do this thing, and the market's crashing, and I'm like trying to cancel them all, and you know how you have to like send the transaction to like cancel it, and like you got it, like that is like never an experience you want to do like while the market's falling and you're like trying to get your collateral. So like it was fine, but I was like, this is just like a pain point you don't have in the markets.
It doesn't take much to add up. I did a transaction yesterday. Like I saw the market starting to get a little sloppy, and I pieced out of a position, and it was like 0.25 ETH at, before it even really kicked up. Now. That's a lot of money. That's to execute a trade, not counting your slippage and stuff. Like that's a lot of money in just gas. Do you think that that's restrictive? as a burden or restrictive as a feature for now for DeFi? Like is keeping it to
I think
larger...
it's a burden.
Okay.
I think it crowds people out of the market right now. I think that's like the biggest issue with it is that like it is effectively like capping a certain chunk of like the ecosystem from being able to like participate in certain things. So I think it's like a net negative.
Do
currently.
you think L2 is going to fix it?
I don't know enough about the L2s to like make like a judgment call on that. I am of the assumption that like most of the spillover of excess capacity is going to go to other chains. But that is not a bearish stance on ETH, which I think is like unique because most people like have this like, look, this like, I say this like every time, but this like whole thing reminds me of like the whole Bitcoin ETH fight that happened like the first time, right? Where everyone's like, Bitcoin's worthless because like everything's going to go to ETH because it does so much more. And it's like, no, like, first of all, there's like a massive network effect and there's so much like value that's already sunk into the first one. So anyone who's going like, oh, this L2 is so much better, it's going to like take everything from ETH and like crush it. Like that's the same dumb opinion. Like ETH's going to keep like the colossal amount of like the value that's already on it and like that network that's like sort of sunk into it. And like all the high value stuff is absolutely going to stick around. But these secondary sort of needs for like space in like the chain, like that's going to just spill over to other ecosystems. I think like I'm of the opinion that the other L1s will like pick up those like edge cases that are getting priced out of ETH. And like that will be the continual spillover. Like I'm less bullish on the idea that L2s are going to solve it versus it'll just like spill over to like other chains. I mean, like that's like why we bet really big on Solana, like we bet on Avalanche, like we bet on like Algo. Like with most of like we don't know with a ton of certainty. Like we're concentrating our bets more as time goes on and it becomes a little more like clear who's like a front runner. But we just tend to think like all that activity will spill. Like I think most of the DEX relating stuff will not be on ETH in the future. I think like that use case will probably spill out. Like maybe the AMM stuff will stick around because it's not as high. But like to have like a performant DEX, like it's just like unlikely that it'll exist on ETH at this time. Like we're an investor in perpetual protocol, which uses XDAI. And that's even having like scaling issues with just like that use case that's not even under full load now, right? So like that L2 is like having performance issues and it's not even like punching a ton of
side
stuff yet.
chain, basically.
Yeah, I just like I don't know. I'm skeptical. I'm not a full-in developer though, right? So like I can't speak to the technical nuances of it, but like I do tend to feel that if people are being priced out, will switch over to other solutions. And if you can put the throughput on them, like I think there's like you'll be able to build network effects around that will cross over, but it won't be like it won't net destroy ETH, right? Like ETH will continue to accrue value and keep all like the high touch stuff. So I think there's a world you can be bullish on the L1s and like be bullish on ETH and like be fine. And like those are not fighting internally like with it. So I don't know. That's my thought process on this whole like scaling stuff as it goes. I also think like the ETH2 scaling stuff is just it's too long. Like I just like think there's too many like people trying to come for like that part of it. Like maybe they'll get there, but it's unclear to me if it will be enough and fast enough versus like what other people are like just starting to peel those like cases away already.
Yeah, it's gonna be an interesting year. I think a lot of how crypto plays out for the next year depends on how Optimism launches, how Arbitrum launches, how the other L2s launch for ETH, and like if they can deliver what they promise. I've seen like so many investment decks come through. We're doing L2 for this, we're doing L2 for that, and the promises are always, you can mint 1 billion NFTs in half a second for free, and you don't like kill any trees. And if these promises are viable and there isn't some like enormous downside that they're just not writing in the deck when they're trying to raise money, then I think it will be a bit of a like the ETH bull dreams come true, and then EIP 1559 happens, and maybe you get an ETH season. But if these L2s, suck, if they don't work, or if they're like sort of disappointing, or at least have I'm gonna get a rise out of the maxis. I don't intend to, but back in 2016 or whenever it was, I was super excited about the Lightning Network, and everyone was like, the Lightning Network is going to make Bitcoin so fast, fees are going to be so good, you're going to be able to do so many cool things. And the Lightning Network launched, and like, does anyone know anyone that's ever used the Lightning Network? I've never used it.
It's a good point, right? Like you can get to the perfect solution late and it's irrelevant, right? Like if the good enough solution is already like ubiquitous, like stablecoins aren't moving, right? Like maybe they'll start to like incrementally move on to like other chains, but like it's not like we're not going back that direction, even if it like is better at this point. There's like too much like nested like stuff already built into it, which is like why that's why I think like most of this stuff stays on ETH in its current form. I think like the other stuff that like has yet to like find a home will just spill over into, or like use cases that have been completely priced out will like obviously like spill out into like the other chains. I don't know. It's definitely like a very telling sort of story.
It seems like you think there's going to be a place for decentralized trading that uses order books, and we won't just be on AMMs. What are your thoughts on AMMs versus order book trading, and what you think will happen there?
You're gonna put me on the spot. I'm gonna get dragged into one of these threads that's 500 long. And, like,
that's why
forced to do math. Yeah, I don't know. I think there's a world for both of them. Like AMMs are very useful because they're like a like sort of pool of liquidity you can like just hit at any given point in time, and it's useful specifically in DeFi because that's like all you really need. You don't need to like want to do logic on like an order book or like have an order and miss or like figure out like where to jockey. You just like want to price now. And it's like, all right, that like provides that to you, which is super useful.
Number of sushi, and here's the quote.
I just like, there's a reason that centralized exchanges in the world all trade with an order book model and not an AMM model. And I don't think like that's wrong. So I think like that's like the way dominant trading will like be going forward. But I think both will exist. I very much think that.
Do you think one will be more appropriate for a certain type of trading? Like your buy and hold folks will be mostly on AMMs, and your leverage traders, active traders will be on order book systems?
I don't know. That's a hard one because like the buy and hold like crew is like sort of like a whole. I think like the majority of like professional trading activity will just like occur on order books, and then like there'll probably be like long tail retail stuff that like only ever lives on AMMs because you're not gonna like have people making markets for them and like punching. But like Link Dollar or like Link USDC like will always trade probably on like an order book like by volume.
Right. Yeah, that makes sense.
You mentioned earlier that the bull case for DeFi and how much is on the sidelines and how many people can't play yet, and we know that DeFi dominance is such a small part of the overall cryptocurrency market cap. Someone in chat asked, do you see a possibility for decoupling between general crypto market and DeFi?
Yeah, I do. I don't think it's going to happen anytime soon, though. I think they're just too intertwined. Like, I mean, like DeFi's TVLs are pretty much like a proxy for like interest in crypto. And I don't think that's going to change at any given time. When you have like material business that has nothing to do with crypto tapping these things, like probably. But I mean, like, what's the main purpose still of like on-chain lending? It's like leverage for trading more crypto. Like that's like the world still. Like some people maybe take out loans to like buy a house or like a car or something like that. That's not the dominant use case of this stuff. It's still like all wrapped in the speculative like crypto sort of, which is fine. Like that's like a great use case to like sort of bootstrap this thing. But like until that changes, I don't think there'll be a material sort of like split. Like I don't think it'll like exist in its own world for a bit. I don't know. I also like I'm a little not skeptical, but like I am not as like bought into the idea that just because a protocol is working, that it's like underlying token has to like go up in value. I think like that like is a world we live in now where people are like,
right there.
Yeah, I know. Well, and like I think like a lot of people's like argument is like, well, eventually like they'll accrue fees back to it, and like that'll like be the way that it like earns. Like sort of, and I was like, well, first of all, there's like a real security concern if you like become that model. And like the secondary thing on that is like, it's very unclear that is necessarily going to happen in any timeline or at all. Like, I mean, you're taking that big leap there, and maybe that's the way it all plays out over time. But like, just because Compound's TVL doubles, like why does the token double? Like, I don't know. I don't know if that's like clear cut at all. Like it's very hard to price these things. And the only way people seem to price them is like usage. So like, I don't know, like if Bank of America sends 2 times as many wires, like what's its stock price like change? Like it's very unclear to me.
Yeah, I mean, with a lot of them, you could even just say the token doesn't need to exist.
Oh yeah, there's that. That's really spicy.
Maybe a topic for another day. SatStart, is that OG SatStart? Is that the real SatStart? Hopefully they haven't just nicked SatStart's Twitter name. Shout out SatStart if that's the real you. If not, it's a bit weird taking someone's name for Twitch. Can you ask about compliance regulator issues? it's a bit of an open-ended question. So I'm not going to ask you it just directly like that. It doesn't quite make sense. But I'd love to know how your team is structured. Do you have like lawyers in house, and how do you deal with sort of gray area reg compliance stuff?
Yeah, so like we're obviously incorporated outside the States. We have people that sit outside the United States. So that's like a lot of the defensibility. Like one of our partners is not a US citizen. Like that are like, that's the basic sort of building blocks on that. I mean, we do spend a lot in legal getting like opinions about things. We have the benefit that like this what comes back, like we're using our own money. So it's kind of a weird world where like if we were to participate in one of those things and it like went pear-shaped and like we're kind of the victim in the situation versus like like we're not taking other people's money in any capacity, right? Like I'm not necessarily like well that's like the weirdest
division.
Yeah, like I mean like I'm the person harmed in the transaction, so like that gives us a little defensibility for that, but yeah, I mean, like we definitely think about it on the nuancing of like new deals as like stuff goes through. It's tough. Like the problem with a lot of things in DeFi in particular is like there's no guidance whatsoever about like, like crypto in general, right? It moves so fast that like you're getting like regulations now about like stable coins and stuff, and it's like, all right, sick. So like we've just been using them for 5 years and like everything's okay.
Been doing this since 2016.
Right. Like, so there's a little bit of that going on. Like, I don't know what their thoughts are on like, all right, if you're an LP in a Uniswap pool and you're like posting that as collateral to then borrow, like, I don't know. Are you like touching up against like a banking reg that you as an individual? Like, I have no idea.
Could the type of thing you need an opinion on, or you wish you had better guidance on, be like, hey, we have a project we want to fund, but it's a completely anonymous team and we're going to give them $1 million. Like, can we do that? What do we do? How do we go about it?
Yeah. So the general like guidance we've got on that is like, you have to just make sure you're not dealing with anybody in a sanctioned country. Like it really, at the end of the day, like if you're going to do anything in crypto, like you have to make sure you're not doing business with anybody in a sanctioned country. So like you have that burden to deal with. Like you may not, if you don't like have any presence in the United States, but I would say as a general rule in life, you should probably do this because you're going to like pick up some real headaches if something goes like poorly. Like if you look at the things that is going on with like the BitMEX situation, a lot of the issues are really around that. Like that is like ultimately like what came about, that they were like, this is a problem. Like this is like why we like,
yeah.
I mean, in like in OFAC issues in particular are they're tantamount to like treason, right? Like that's like how like this like this thing that gets up. So you really, really need to make sure you're not touching up against any of those issues at any given time. The rest of the stuff that's a little more of a gray area, like it's like, I don't know, like there's some risk that you're like just taking too, right? Where you're like, look, I understand like maybe this is like this project like might run into some like issues with some money transmission issue on like something, but like there's also like an acceptable level of like risk you can like take in those bets, but you can't like take risks on like the OFAC side. Like I guess that's what I'm saying is, and you just try to do your best. Like you try to like get as much information out there as you can and like make a defensible position.
Hello, Mr. Renan. Are you from Iran? No, thank you. Here's your money.
All right, thank you. This was like a much bigger part of our lives when I was doing the business at Circle, because we had to get a ton of like approval for like any asset, just to like make sure it like wasn't touching across like the securities thing. And then we had to do a super deep dive on any counterparty that we were trading with, because like we were effectively like a money transmission business. And like we got the first bit license, we got the 48 money transmission licenses in the States. Like we did that whole, it's expensive and it's like a lot of work too to like be fully compliant in that regard.
Yeah. How's the OTC market changed between the prior bull market and this one?
The biggest difference is like everybody has much better access to capital, and then the spreads for Bitcoin and ETH have just become like water. Like there's just not a lot of money in trading those products anymore. Like when I left Circle, we didn't make any money trading Bitcoin. Like that was like a scratch OTC product. We just like offered it for free effectively. And all the money you'd make was on like the longer tail of the business, right? So it was like a little bit on ETH and then like all of the coins like 3 through 100. Like that's like where all like the real value was. And if you think about it, like that makes sense, right? Like is your ability to provide liquidity in a more esoteric asset class is like much more valuable than you just go on Bitcoin and on Coinbase, like buy 50 Bitcoin, right? You can just like slap it up on the bid and like it'll get filled and like you'll be fine. Like you pay some exchange fees, but like it's liquid enough these days that you don't really have to like pay somebody. But when I was doing this like 4 or 5 years ago and you wanted to source like $2 or $3 million worth of Bitcoin, like, yeah, it was like hard. You had to like know the right people. You had to like go find it. You had to like have plugged into exchanges that nobody else was like plugged into. A lot of it's just been like commoditized. Like it's a much more efficient market that's out there now. So that's very much like I think how like the world is. They've also like become more agency business than like principal. So like we were always operating in a principal capacity where like you would face us, we'd quote you a price, and then it's like our problem. A lot of it's like moved to an agency thing where like they execute on your behalf and then they like just like charge a fee. That's probably like how a lot of this like will continue to like evolve and go for at least Bitcoin ETH. But like the more esoteric stuff will like definitely still trade like via like high touch sort of stuff. I don't know. That's how I see it going right now. It's just evolving as like any other market does and becoming more efficient.
Yeah.
When you were chatting about the slightly more complex trading strategies and the prop trading stuff, there was a lot of questions in chat, and they've long gone because it was a little while ago, and I can't really remember the exact questions. But I'd like to package it as if you were someone that was either getting started in crypto today or is very much retail. Let's say you're Ledger. And you know how long, you know how to short, and you've just learned about stop losses maybe, but
I don't use that.
You're not entirely sure how to use them yet. Where would you go to like level up your brain, move in the bell curve towards the correct direction, and learn more about strategies to protect wealth or to up or down risk? Just do things that are a little bit higher IQ than Ledger's typical trade.
My middle of the bell curve, smooth brain.
I mean, I guess my like first advice would just be like just trade spot and like just sort of don't do anything. Like I think like the biggest like advice like people really should follow is like they probably shouldn't be trying to like get super fancy with like a lot of like the leverage instruments. I think that's like generally where stuff going. If you really want to go down that path, there's like a couple books that are like out there that are like pretty good. I know the whole book about like futures and options is like a really good place to start. And like also just start really small because like you're gonna like have absolutely no idea what you're doing for like a very long time. Like you just like gotta basically put in some hours and like lose some money and like sort of figure out like the movements of the whole thing. But like I don't know, like it's I don't want to be defeatist in it, but like in aggregate, like I think those people lose money. So like if your approach is I just like want to do this on the side to make like a little bit of money, like you're probably gonna like just get toasted. Like you should really like if you're gonna like dedicate this, you gotta like really put in a lot of like time and effort and like understand how the leverage moves through the system and like watch like how liquidations like move and like watch how like spot pricing moves and like have an understanding of like how basis like trades, like why it trades, like when it trades, like what it does, like that. And that just takes time too. So like you got to put some like real hours and like time into it. So I don't know, that's my best advice is like read, I guess, what you can on it, but then also like be very small, don't do it at all if possible. And then like just trade spot for a very long time. I don't know. That's like the way I would look at it.
And what about if you are one of those people, you know, you're looking to just make a little bit of extra money. You're in a pandemic, so there's not many activities that you can do. You've got a spare bit of time, maybe after work, in between work, on your weekends. Maybe you're lonely. This is not me. I'm talking about a hypothetical viewer. What strategies would you?
Yeah, I would go look in
what would you do?
Go look into the DeFi stuff, right? Like, I mean, a lot of that stuff, it's not risk-free, but like it's less risky than trying to like speculatively pick the direction of like there's just so much like yield and like free effective stuff just like falling from the rafters and like so many pieces of DeFi that like, yeah, you've got some like more smart contract risk and like you've got that, but like you're much more likely to end up in a positive outcome playing in that world right now than you are taking speculative bets on directions of tokens. I think like that would be a good place to start. That would be like where I push somebody if they like really like were like, I want to like be speculating and like looking on. So I'd be like, all right, like go find something to farm and like go like embed yourself into that world. You also just have like a much higher chance of being like right in a way that's like early and material in that world than you do. Like, look, like Bitcoin and Ether, like they're large assets now, like, and they trade like large assets. Like you are much like more likely to have like a material like windfall sort of like type thing playing in that world and having edge. And I mean, like you can do research and like figure out what's going on and have like an actual edge over like other participants in the market because there's too much going on and nobody can pay attention to all of it, right? Like you could realistically like find out about something. Like here's a great example, right? Like YFI, right? Like that sort of existed for free for like weeks until it like became like a colossal thing. Like it's totally conceivable you didn't have a lot of balance sheet and like figured out that that was a thing and were able to identify it early. And like most of the large players didn't because they're so busy with all the other stuff that's going on. So like, I don't know, that's like really like where the nesting ground of like things are before they like get really born. So I would like embed yourself in that world as much as possible.
So, I think that's very good advice. I think most people are getting themselves blown out trying to chase missed returns. They see it went from 4,000 to 60,000 and they thought, shit, if I held that, I would have made whatever. Well, if I just up my leverage a little bit, I can maybe catch up. I can maybe catch up to what I would have had, and then they just blow themselves out. And I think it's much easier to get a 50x by buying something like Wi-Fi in the early days than it is to actually just use 50x leverage to get there. I want to ask, are you a believer in the super cycle?
Oh, would it? So I gotta be honest, I don't entirely understand this. So the super cycle is just that like we won't go down again.
Yeah, there's like it's literally up only.
Well, it's kind of like we won't have like an 80% down bear market. It's like a continual, like more like we'd follow stocks, like a bad bear market, maybe 40%.
I do buy that. I buy that if that's like if the super cycle is just like the downward sort of cycles will be like less egregious than they were like in the past. Like, yes, I'm a buyer of that. I'm not a buyer if it's only going to go up. Like, I think it's going to have fluctuations with like risk assets just as much as like everything else is going to. I mean, like, I don't know, but like, I mean, stocks got bodied last March too, right? Like they get like whipped around like just as much. I do think the volatility will dampen as time goes on. I agree with that. Like, I think it to the upside too, though, right? Like the movements are not going to be as like like you going from like a 1 trillion asset to a 10 trillion asset is like a really big deal, right? Like that's not necessarily going to happen the same way you go from 100 billion to a trillion. Or when you went from like 10 to 100 million or like whatever, like those like same relative like step ups and like percentage returns are. So yeah, like I think you're just like hitting the reality that like the law of large numbers in the sense that like it's so big now that like moving it will be like a bigger deal. So, but I'm not a buyer of the thing that it only go up. Like,
do you have Bitcoin conviction in like the macro landscape? Like, are you a firm believer that Bitcoin plays X role, or do you like to be here for the trade and the growth narrative? What's your approach?
I think that Bitcoin is proven. I think you just say this now though. Like it is a risk macro asset, right? Like it is big enough now that like it is like accepted. And like I think my thesis was always that it would get to that size and stay there. Now, if you're trying to tell me like how do I think it will perform relative to other macro sort of like events, I don't think anybody has any idea. I think that is like very much unknown and like unknowable just because we have no data points in the past. Like and also here's the other thing. Like if I'm not good at knowing what other macro like assets are going to do. And I don't really think anybody in crypto is, because like we're not in those worlds, right? Like there's a guy that like just trades like euro dollars at Goldman who knows more about euro dollars than anybody, like probably all people in crypto combined, right? And you're going to tell me that like you're going to like figure out like the nuances of like Bitcoin's movement on like prices there. Like, I don't buy that. So and I don't think that's like a useful exercise in like trying to figure out. But I do think it will start to have like material like movements with other macro assets like as time goes on. I mean, like as its size becomes like it can't like exist uncorrelated forever. I mean, it's already become much more correlated than it was in the past to like other sort of things. And I think that's just like the person stuff, but which is good because you do start to get this like downward sort of like dampening and upward dampening, like as it just like sort of like supplants itself in that world. It's like when a stock gets like listed in like the Dow or something like that, right? Like you have like just that constant like sort of like inflows just because it is in there. And like that like changes its like vol surface.
So you're giving me advice on where I need to spend more time, because I try to grapple with the macro often, and like I usually find myself failing or like seeing those correlations change over time. And the best I've ever come up with is it's just a chaos asset, but I don't know how productive that is from trying to come up with a trade.
I mean, it's just like, it's really hard to just trade macro if you just trade macro. So like, it's like so hard to figure out what's going on in that, especially like going forward, than to like think about the second order effects of like what happens with Bitcoin. It's too much. I don't think it like yields a lot of like yield thinking about all that, like as like a thought process. There's much better ways to like make money in the industry and like make positive EV trades than like trying to think about all that stuff.
Yeah.
Apparently Uniswap v3 details have just been released during the stream.
Is it out?
Apparently
Is it a
it's
video
out.
or?
I don't know. What if it's exactly the same except they've added KYC? That's V3.
Oh
It's here. Yeah, apparently it's out. Everyone in chat is spamming it. Apparently it's now. It's out in a few days. Maybe we're just getting trolled. But I wanted to ask a little bit about what you see as some of the worst trends happening in crypto now. So, we've chatted about the stuff that you are bullish on, the things you're excited about, and ETH competitor chains and DeFi stuff. I'd love to know. I'd love for you to dunk on some shit. What are the worst things you're seeing?
I don't know if worst is the word I'd use. I would say I am uninterested in NFT related things. And I'm going to use that super broad. Like, I have no problem with people doing it. Like, that's what you want to do with your life and get involved in. Like, I'm not going to sit here and like criticize, especially considering like the things I've found myself like doing in the past. I personally don't find it like super interesting. Like, I'm not like very interested in like going and like buying NFTs or like pricing NFTs or like figuring out like what all the different nuances of that are. I think if that like becomes a material part of the market, like we'll either hire somebody internally to do it or we're just not going to do it. Like, I'm probably not going to be, and maybe this is me just like getting old. And like, that's like, I'm slowly like pricing myself out of like what the newness is. I find them super not interesting.
Do you think it's sucking liquidity out of the DeFi market?
No, I think it's too small still.
Okay.
I don't think that has spilled over at all. I don't know. I don't think it's a flash in the pan because it has like continued to go and there's like material sort of money flowing into it and like a lot of people are interested in it. I don't know. I just don't care. That's like just like the truth of it all. Like I'm not interested in buying them
it's trading altcoins like 2013, 2014 altcoins where they're actually worthless. But for a while there's like this shared myth that, like one of them is going to integrate with Safaricom or something, whatever the rumor was about Zeta.
Right.
So it's just altcoins with pictures where some of the coins are shiny and special. That's the way I think about it. It's just 2013 altcoins, but they've got pictures on top as well.
Yeah, I don't know. I mean, people love them. So I'm clearly wrong. Like in like that regard. Like I thought this was like a flash in the pan and be like over, and like it has not. So like I'm very much like understanding that like I'm like being the idiot in like this whole like ecosystem, but I'm like okay with it and like I don't care.
So let's bring that to how y'all may approach something like this internally, because I wanted to get at who you bring in and why. Do you bring in traders, researchers? Do you rely on someone saying, "Hey Dan, this is for real. Quit discounting it. Here's how we need to approach it"?
Oh yeah, totally. No. Like, and there's guys internally that like 100% lobbying the other side of this, and like you very much want that in like your team of like you like want somebody who's like, look, if you have somebody who just like sits there and be like, Dan, you're a genius, that's right, like that's like useless, right? That's just like reinforcing the same thing. Like you need people that are like thinking about things differently and specifically like are on the other side and like pushing like why the market might go the other way. So like we definitely have like internal voices like lobbying the other side of this, and like look, like they're doing a ton of research on it, and like we may realistically like do investments like in like the whole thing. Like I'm not the only voice like on the decision-making side for like risk related things. Like I'm personally just like not going to be the person that goes down that path. But if we have people that want to, like, I'm not going to stop them if like they think that it makes sense.
Yeah.
We've been streaming for about an hour, 10 minutes. I'd love to get some questions from chat because at the moment they're all just spamming
about uni.
That's
okay.
And about the sun on
they are gonna the blog post did say they're gonna be on Optimism V2 by the our L2 on May 5th. Anyway, just some random news. Dan, do y'all treat these types of things? Is that a tradable event for you? Like, will you go step in on a news based item?
100%. Like we see news, like we run it. Especially if we get it fast. It depends, right? Like we gotta like. It's really a gut call too. It's like, all right, like we saw this, like we see what the market's doing. Where do we think we should price it? And then what am I doing in like relation to it? And like, yeah, we 100% will like run things if we like have it together. I mean, like we'll really aggressively lift offers too if we like think something is like a material upside and it's like mispriced.
Yeah.
So yeah, we do a lot of this like when we get it.
Some of the questions earlier that we had in the chat, since people are still spamming uni news, is about like more about who you bring in and why they work with you. So if it's bodies at the trading desk, like who do you want as a trader? How can someone, turn themselves into the type of trader that CMS Holdings would be interested in?
It's hard because like we really have leaned on historically people we've like known for a long time. Because you're like dealing with crypto, like we have to have an incredible amount of trust with anyone that like we bring in. Like that's like the biggest like portion of it. Like even if you like were to work here a year, we probably wouldn't let you like touch anything. So like just like because I'm very security concerned about like a lot of like pieces of things. So there's like that aspect to it. And like we tend to just like look at people that come from a market making background are great because like they think about risk in the right way. And like we tend to like find that as like there's a lot of people in crypto that we find that are like, I think ETH's going to 5,000. I think it's the greatest thing that's ever existed. And there's like no way that this doesn't go. And I'd be like, that's great. That's not useful to me at all. Because like that's not going to drive any of our risk decisions in any time frame that we're going to like possibly be like holding on to. I was like, and like that's just like not how we're like sort of playing the game. What I want like somebody is like, look, like the open interest is doubled and the perp financing is like tripled over the last like 24 hours. I think this thing is like way out of its skis. Let's sell a bunch of ETH and let's buy like the basket of altcoins against it and like wait for that spread to compress. Like that's a trade I'm interested in. Like that's something that I think is like capturable edge on like a timeline that like we're looking to like trade in. So like people who are much more nuanced in like the mechanics and like the reasons why things move on like shorter duration timescale, call it like a day to a week to a month sort of thing. Versus like, I think that this version of L2 scaling is going to go up and like this token will like 10x. Be like, we do that in like the venture side, but like that's just like, we're not trading the liquid book that way. Like it's just like, it's too long a time frame.
It's going to be tough for our average listener to get a job at CMS Holdings.
You never know.
I think you're underrating them, mate. They're just tuning into this to like dumb themselves down a bit. They're all actually making 100x.
They're all like Wall Street quants looking to make the shift over.
There's a lot of like real talent coming from that side of the world, like that we see like coming across now. Like definitely, like the biggest issue though that like we find traditional guys have when they cross over is they're like too rational in the sense that like they like they'll be like, oh, like this hit and like I don't know, went like 10%. They're like, I'm going to close it. And it's be like, no, like this is just getting started. Like their expectations of like moves are like just off by so much because they're used to asset classes that are so much more subdued. Or at least that's like what I've always found is like they're way out of things early and like they like have the right thesis. So I don't know. But they get
the most interesting thing I found is how so much of the like exceptional trading talent are like fucking babies. They're like children. And instead of playing video games, like, you know, when I was like fucking 13 or something, I played Pokemon or Call of Duty or whatever. And now they're playing like leverage markets and their brains are like sponges. They just absorb everything. And they're like these like kids like in school or secondary school or whatever, like coming out with like these incredible trading strategies, making insane gains. I think Cryptopathic is like one of them, where like I was friends with him in 2014, 2013, and I just didn't realize the whole time I was talking to like a 14-year-old. Like,
no, it's happened to me too, where you're like, shit, like you're like can't even drink, and it's like you're like swinging this. Yeah, I mean, like the other big advantage is like you have time, right? Like this market is so like it never ends, and you can like really get lost in it indefinitely. So they just like have the time and bandwidth to like really get into the nitty gritty of it. It just becomes harder as you get older. Like there's just like no way around that.
Yeah, my brain's dulling.
Yeah, and like life just hits you with other stuff. It's just like it's a market for young people. Like it probably will be for the indefinite future.
How do you plan to take money off the table from a firm perspective? Like, do y'all hit a point where you're like, all right, we want to shift towards a more risk-off strategy here, and what triggers that type of change?
Yeah, that's almost like entirely driven by like what we see as like leverage in the market. Or that, like,
okay, so it's almost short-term,
like,
always short-term type stuff. Is it ever like a longer term?
Well, we've only been doing it 2 years now on the firm side, right? So like we haven't really like had like a big decision to like risk off, which has worked, but probably not. Like we'll probably just like keep it long and like plow through. Like I think in general, like we'll have the thesis that this stuff is like going to continually like sort of incrementally grow in value and like adoption and interest, and like we'll go up. Like we're willing to like just like take the swings.
Awesome.
Start wants to know, what are your thoughts around like exchange listing events? When things that you hold like get listed on exchange.
When do you dump your bags?
Do the initial like turbo pump and then go to zero. Do you trade it? Do you hold through it?
I mean, we definitely trade them as like events for sure. Like we'll tend to like put liquidity into them, which is like one way of, I guess you can say, dumping bags. But like we don't
I didn't
tend to
dump
make
on
like
my followers. I just gave them some liquidity.
we don't really like think about that more than aggregate valuation levels of like when to enter and exit things. It's like that's really like the driving thing. Like if we're taking like shorter term directional sort of just like listing related stuff, like we're almost always covering that risk after we like sort of think it, right? Like because like at the end of the day, like we have like a valuation that we like think makes sense for something, and like that's what drives the decision of what. And a lot of times that valuation is like a relative one, right? Like it's like, all right, we see this valued compared to that, and like we think it should trade there, and like that ultimately decides long term like where we're like keeping something. But we'll like trade around it for sure if there's like a real market move for some reason. We've definitely done that a bunch.
Are y'all activist investors on the illiquid side? Like, do you step in and give advice to the team and talk about strategy, or do you mostly throw darts and see what they do?
We definitely help whenever asked. It depends. We have like varying levels of like sort of, I think, involvement with like our projects. It depends. Like the number one thing is like, do they want it? If they do, like we're more than willing to like obviously get on the phone and like talk things to them. And then like we will provide like liquidity to a lot of things. Specifically, if we can do it like on Uniswap or Sushi, or if we can like pump out a market onto it, if it's like a decentralized sort of venue. So like we'll be active participants in like the sort of pieces of it as it comes out. Like that's probably the biggest like way that we're like active with them. It's varying levels though. Some teams don't care. Some teams want to like get on the phone every day, and like we're happy to do either or.
Every day though, that's a bit much, isn't it?
That is a bit much. I'd say there's only a couple people I talk to daily. I don't think I get on the phone, but
someone in chat wanting to know the best trade you've ever made and the worst. I'm excited for the worst.
Oh, the best trade we've ever made. I mean, probably one of the best trades in like recent history was like FTT. Like that was like a pretty no-brainer one. And Serum.
Only, for real.
Yeah, I mean, Sam just like forced it into life. I mean, like, and it's a great exchange. I mean, like a guy who worked for me for a long time in Asia went to FTX really early too. So like we had a pretty good line in with them, and like we tried to give them a lot of feedback, and we were like pretty heavy users of the exchange out of the gate. So that was probably the best recent sort of trade like that we've like seen stuff go through. I'm trying to think like it's like the worst trade that I've made in recent history. I don't want to like also take like a digger on anybody.
It's like a team that just bombed.
While you
I think
about
like
it,
we've been getting long dominance for like the last couple weeks, and that's been a bad trade. Like that's definitely a recent one. Like
how do you express a dominance trade?
We try to use the index products as much as possible, but then we'll also like you run out of liquidity in those sometimes. So then we'll just like agnostically just like sell baskets of alts like against it. A lot of that too is just like to hedge altcoin positions that we'll have with things that are like closer to it in beta. Yeah. That's been really bad of a trade like the last couple of weeks. Like that's definitely been, I mean, like we've straight up just gotten like zeroed on like stuff before, like in the past. Like I definitely have gotten like rugged in effect. So like we've definitely like we got like we owned cover in the day, and I think we got like rugged on it twice. So like that thing like that in particular was just like a terrible like sort of bet twice. I mean like so like things like there's definitely like a lot of things like that in our pay. Like we don't shoot at like an average. We try to like be better than the market, but like we absolutely like take zeros just like everybody else like on stuff. So those two were definitely two big ones that we got like burnt on.
Fool me once.
Yeah, I should have known. That the second one was absolutely on me. Like, the first one was like chance, but
do you approach anything from a pure equity perspective, or are y'all almost always looking at like token allocation?
So we've done done a couple of equity deals, but like it's almost all, like exclusively like on the token side. We've probably done 75 deals now, and we've done 2 equity in that component. We'll probably do more on the equity side going forward, just as like a place to like park cash. Like we have more balance sheet to express on those trades. We just like things that like have a known liquidity horizon.
Yeah, for sure. And there is none, as Cobie has expressed on the show before, for those angel deals. They just disappear.
They just go to zero. Someone in chat wanting to know, what do you do to like switch off from the market? It's very 24/7. Can you do?
I
de-stress?
don't, and that's the problem. I like that is like the honest to God answer is I really don't. If anything, I mean, I try to work out when I can, and then like I try to spend time with my family. But like realistically, it is all consuming, which is a problem. This is like what I was saying. Like it becomes like much harder like as life goes on. It is like why I think like it's a young man's game probably for the indefinite future.
Yep.
Yeah, not so young anymore, mate. I'm starting to get on a bit.
You're decaying.
Yeah,
you're becoming one of us.
But that's as much as my lifestyle as it is the natural progression of aging. Crypto Ted or Crypto Toted, who knows?
Crypto Ted.
How do you come up with all the CMS names?
Oh, it's just like it really is like I just like will randomly like I'll just be like sitting there sometimes at like night and I'll be like, oh, that's a good one, and then I'll like write it down, and then I'll like I have like a queue of them that I like rotate through. So sometimes I source them from the crowd in like Slack, and I'll like people have a good one, but like I'm trying to like keep it mostly to like my world.
And what are the avenues for keeping up with the market? Twitter, terminal products, anything that people might not know about?
I mean, all the Telegram chats, right? Like there's a lot of like information just be like gleamed off, like jumping directly into like the project. Like every project's got either like a Discord or a Telegram or something. Like you can pretty much get to anyone you need to, and they'll like usually be receptive as long as you're not like super brash and abrasive and like a dick. Like they'll generally like talk to you. So it's a very approachable industry from that side. Like you can get to anyone you need. And like you should always just like follow the primary sources best, right? Like go to like don't go to the rumor mills, like go to like where like the stuff's like actually happening. And if you're a developer, like get involved in like the GitHub and like see like what's going on the development side.
Yeah, sure. Dan, I know you got a hard stop, so
I
we
know
just
I gotta go to bed.
What do you want to leave people with?
Look, there's like any piece of advice that like is relevant to this industry is like you just have to survive. And this like comes back to like the leverage thing is like everybody that has like been around since basically any time that they've been in this like industry has done well as long as they like were able to like stick it out. And like in order to stick it out, like you need to like not be a forced seller, and you like need to be able to like take the swings, and like that's the biggest, like that's the most important thing is just time, and you like need to like make sure you have it on your side.
Awesome. I appreciate that. Cobie, what do you want to leave folks with?
Stay alive. That was great advice. Thanks so much for coming on. I have no free alpha for anyone. I'm still trying to take in the prop trading stuff, to be honest. I feel like I've been doing it wrong all this time. I've been here 8 years. Thanks. Shout out Sat Start in chat. Shout out Sir Joshi. Dan, thanks so much for coming on. Hopefully we can have you again soon.
Thanks, Dan.
Peace. And the curse is broken. The price went up during
the whole show. Go to uponly.tv/blockfolio. Go to uponly.tv website, and you can get Dan's notes and the books that he recommended, all that kind of stuff right off the website. Appreciate everybody being here. Give us a rating and review on iTunes. Help us get up those charts. We need the downloads. We need everybody to be checking out Up Only TV, trying to bring you the best stuff. We'll talk to you next time. Thanks for being with us.
Bye, everybody. See you later.